Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in this video I'll be sharing my latest stock market moves. I've got some sells, some buys, some new additional stocks and ETFs that I'm going to share with you guys, inshallah. So stay tuned till the end of the video to see all of that. If you have not liked the video already, please like the video, subscribe to the channel. Of course, as always, please help the channel by joining us on the Patreon account, where you get access to a lot of these things, inshallah. Now, just a couple of things before I start the whole video. I have been away for I think about 2 weeks now, and the reason is genuinely it's just been busy. I have been so busy between work, family and everything else. I have not had the opportunity to do anything other than just literally go to work, do what I need to do from the family side of things, and just that's it. So inshallah, I'm going to try to find a bit more time in the next few weeks and inshallah release at least one video a week to kind of share with you guys what I'm doing, what I'm buying, what I'm selling, and just to keep up with the general overall markets, inshallah. Now, as you know, a lot has happened in the last couple of weeks because of earnings reports and so on. So I'm going to look at every single company that I own in this portfolio, and then inshallah start doing a quick videos to kind of go through some of the things that I've noticed, because I've seen some of the companies that I own are down over 10% just in the month of October. Now, the other thing that I've found out is I haven't been looking at my portfolio, but this, what you see right now, this is the entire portfolio value right now. Trading 212 is doing something dodgy. It's not dodgy, something basically they made some changes which are quite interesting. So we no longer have the stocks on here, but what we have is this kind of heat map, if you like, which is nice. I guess it's gonna take me a while to get used to. And then we've got the two pies. So we got the halal stock portfolio, and then ETFs, which I will be talking about today because I've added a new ETF to that pie. And this is overall where we are in terms of the entire portfolio. So just over £110,000. And as you can see, for like when you click these things, it doesn't actually change. You just have to basically do this to find out. But here, if you click each individual pie, it gives you a different view, which is quite nice if you think about it. Okay, so for the today, we're up about over 400%. Sorry, £400. Which is good, but for the week we're down over 1,500. For the 1 month, over £1,000 in profit. For the 3 months, 2,300, and then for the year about over £15,000, which is about 17% rate of return. I haven't looked at this yet, but I think that might be money weighted return. Oh, okay, right, so you can actually click and gives you more information. There we go. Rate of return, rate of return uses money weighted rate of return to calculate your performance. That is really good. That's something that I hoped they've done earlier, because that can now give us, I don't need to do any spreadsheets or anything like that. It will tell us exactly where we are for the 1 year. For Max, for example, apparently my rate of return over the last whatever since I started the portfolio is, which was a actually it doesn't take that into consideration, so it starts from December of 2021. That's interesting, but there you go. So 28%, which works out about over £18,400. So yeah, it's interesting. They made some changes, and yeah, it will take me a while to get used to it, I guess. But yeah, it's interesting. That's just for the individual stock. That's nothing to do with the ETFs. Yeah, I'll share with you guys what I think about this. It seems a bit interesting. I think if you click this side here, and then you get individual things, which is nice. And I think you can also change it by gain or loss. So right now that's where it is, and you can see the gains of each individual stock that I own. Now let's talk about what we came here for, and that is basically the stock that I sold, the one I added to, new stock that I bought, and the ETF, inshallah. We're going to do it in that order. The company that I sold out completely is Medtronic. Medtronic has been in the portfolio for quite some time and genuinely has not done much for me, other than it basically went flat on one of the days and I actually sold it. So I actually just broke even. There was nothing, there was no gains, there was no losses from that. Of course, I got some dividends, and the reason I sold it is not because it's not a great company. It actually is a decent company, and in terms of dividend side of things, it's a safe. You got your over 3%. Valuation looks very reasonable. One of the major reasons I've sold is this part here, where the latest increase was only 1.4%, the 5 years only 7%, and the last 10 is about 12%. Now that's not huge, but there are other companies that I genuinely feel like that will do better. Okay, and I'll share that with you guys in a second in terms of dividend side of things, because what I'm looking for is not just the dividends. I'm looking for the growth of that dividend, as well as hopefully some sort of a price appreciation. Now, this company has done absolutely nothing for the last 2.5 years, 3 years that I think I've owned the company in the portfolio, and although the metrics actually look nice and the company is good, I genuinely don't feel like it was fit for purpose in terms of keeping that in the portfolio, because I do have other companies that are very similar. So it was either to sell this one or J&J, and I genuinely feel like J&J is probably better placed right now than actually this one. So I'm holding on to J&J. I sold this one completely, and that money went to, first part of that money went to ASML. ASML is down a lot, so year to date we actually are down about 11%, but when you look for the 1 month, it's almost a 20% down. Now it's below 600, below 700. I bought it just around 700. That was about, I think, last time I actually looked at the portfolio about 2 weeks ago, about a week and a bit ago. And as you can see here, we've got 21 strong buys, 8 buys, 10 holds. And as you can see here, all closer to 40% upside from where we are. Now, this is a very cyclical business, and I genuinely mean that, because, but at the same time, I feel like it has it's better in terms of, in terms of expectation wise. Okay, anything can happen, but in terms of expectation moving forward, I feel like ASML will do 1000% better than Medtronics right now. The fact that it was very much undervalued, and like I've always said to you guys, this of course is depending on the how if there is a massive demand for chips, and of course these companies will then, the companies like Intels and TSMCs and all of that will then buy the product from this company in order to be able to meet that demand. And right now there's a massive demand for AI. Computational basic side of things is actually quite important. We still got quantum computing on the pipeline as well, so there's a lot of supercomputers and all of these things that need to be powered by these chips. So I don't think basically the chip market is going to go down completely to zero anytime soon, and for that reason I'm quite bullish on this company, and I'd rather have this one in the long run than actually Medtronic. And as you can see here, this is the earnings per share. This is the earnings per share, free cash flow per share. And as you can see here, they are buying back their own shares. And of course, in terms of the total revenue side of things, it is heading the right direction, of course. But we are expecting a decline basically this coming year. And I am happy with this one right now. I'm going to hold on to it. As you can see, it's about 28% discounted right now. $935 per share is where they think the price should be. Of course, the company has wide economic moat, and when you look at the return from this company over the last 10 years, you would be very surprised, because if you compare this 21% in comparison to what Medtronic has returned, there's a massive difference. So I shouldn't even be comparing those two companies right now. So that's the first one. So I actually bought 3.5 shares of this company, and I'll share that with you guys in a second. And also I added a new company to the portfolio. That company is Canadian Natural Resources, and I've actually talked about this company. I started buying a little bit here and there last month, so I've actually now started buying more. So I actually took quite a bit of the money that I got from Medtronic, the sale of Medtronic, and actually put into this company. I'll share that with you guys in a second. But one of the reasons I've done for this is because this is one of those companies where I'm buying it for the dividends. Okay, so it's almost a 5% dividend, 70% safety. Valuation is not reasonable right now, and as you can see here, the dividend growth, okay, 7%. So that was the latest increase in comparison to Medtronic. Look, 51%. So in terms of the payout ratio, they're very similar, but the latest increase was better. The 5-year is better, and the 20-year is better. So I'd rather own this one and see how it goes. And of course, the money that actually I was receiving from Medtronic, it was actually I'm going to receive base similar. sort of basically dividend income from this one, because the yield is actually slightly higher and so on. So in terms of growth side of the company, of course it is one of those oil companies. Oil is very cyclical, and it seems right now is undervalued. So if you look at the 5-year average, is 4.47. Right now we're looking about 4.87, and in terms of PE side of it, okay, you can see is almost in line with that, basically with the 5-year average. Now the earnings per share ratio, earnings payout ratio, as you can see, is very up and down if you think about it. So right now we're normally looking for below 40% for this type of companies. Right now we're looking about 70% from this company. Now in terms of the earnings, basically shares outstanding, as you can see, is declining here, and total sales is very, very cyclical. What I mean by that is 1 year the oil price might be up and people are buying a lot, whatever, and of course they will make a lot of revenue from that, and then the following year your oil prices might decline, and then of course for that reason the stock price, the revenue for this company will also decline. In terms of return on equity, return on investor capital is absolutely amazing. The free cash flow margin is really good. The operating margin is excellent. So I really like this one, and I'm going to keep on holding on to it. Inshallah, I'm going to keep adding to it every single month. And as you can see, according to Wall Street, it is a buy right now. We've got 8 strong buys, 5 buys, 10 holds, and as you can see, it's about 16-17% upside from where we are. That's where they think the price should be. Right now it's basically $34 per share. So I'm going to continue buying this one, inshallah, moving forward. And the earnings expectation is very similar to any other oil company. We have up and downs. So as you can see here, this year they're expecting 11% decline. We've only got 1 month left of this year, but then next year about 9%, and that can easily change depending on the demand for oil, and more or less similar thing to any other oil company out there, whether it's Chevron or so on. If you're still watching the video and you have not liked the video, please do so. If you have not joined us in the Patreon account, please, like I've always said to you guys, it makes a huge difference to actually be able to pay all the subscriptions that we use to analyze these stocks and so on. So I would definitely appreciate if you can do that. And final thing I want to talk about today is the new ETF that I've added. Now I have one ETF here before, and you know that. I'll share with you both of them in a second. But the second one that I've added is this one here. Okay, Islamic, the iShares. Now I've had this one before, but I came back to it. And the reason, I'll tell you this, okay? In the long run, inshallah, maybe 10 years from now, I will not be able to do basically analyzing stocks every single day. What I'm planning to do, inshallah, is have 20 to 25 share basically companies in the portfolio. 5 of that I want to be at least 5 of them the list to be basically ETFs, and then 20 of them individual stocks, or maybe 15 individual stocks and 5 ETFs that I can easily manage. Okay, so what I'm planning to do now is to build enough, just add to those 2 ETFs as much as I can moving forward, because what I've realized is I keep saying, you know, I will change my entire portfolio at some point, not in the entire, but majority of the portfolio into some sort of ETFs in the long run. Why not start that now? Why not buy it now and just kind of dollar cost average, just like what I'm doing with all the other companies, and it doesn't hurt. And these ETFs has actually done all right, just to show you. And here we've got the 2 ETFs. So these 2 are very similar. So we've got the US version, okay, the of iShares, and you've got the world. So these 2 here have done absolutely amazing in the last 5 years. So as you can see here, one is up, this space, the US version is up 62%. So imagine I bought this 5 years ago and I left it alone. I would be up right now 62%, which is quite decent. You're not be in the market, okay? You're not be in the S&P 500. I think the S&P 500 is about 80-something%. I can't remember exactly how much is up, but it is not that much. However, they are, remember, these are ETFs, so sleep well at night. You don't have to worry about anything. You just, let me in fact check, because that's bothering me. I want to see how much is up in the last 5 years. Okay, 80-something%, like I said, but there you go. So okay, so overall these are sleep well at night. You don't have to worry about anything. You just buy and hold every single month, and inshallah in the long run it will be better than having your money sitting in your basic bank account. Because the last 5 years you would have lost quite a bit because of inflation and everything else. And that's the beauty of investing. If I can actually get return on my money for 62%, 63% return on my money for the last 5 years, you would definitely have taken it if I have given you that from day one. Okay, so what I'm going to do is I'm going to dollar cost average into these ETFs. I've done a lot of analysis on these ETFs, so you can have a quick look on some of the ETF playlist and to see it. But as you can see here, this is the only thing that bothers me about this one. I've always said, okay, I don't like the fact that 27% of that is actually Microsoft. They need to rebalance it very soon, and I think that might be coming up very soon. We've got Tesla, we've got Exxon, we've got loads of these big boys here. And remember, ETFs are basically slightly different. They will take in the entire ETF and treat it as a one single company, and then they will apply the Sharia compliance side of things. Okay, so this is the first one. This is the one that I'm actually planning to add, inshallah, moving forward as much as I can. Now, just to kind of reveal all of that to you guys, as you can see, the holdings now, I've got the iShares, and as of course the Invesco Dow Jones, which is something that you knew I've had in the portfolio anyway. I've been buying. It's about 7% up, and this one I just bought it a few days ago, and that's just down a little bit right now. So I'm going to dollar cost average into these two ETFs between now and inshallah, and in the long run, inshallah, that's what I'm going to do. Now, this one, of course, is slightly doing better, okay, in terms of performance wise. And this is why I really like this one. You're up about 70 year to date. If you bought it at the beginning of the year, right now you'll be up about 17%, which is really, really good. Like, and I don't think it has existed. It's been around for quite. Let me just click 5 years. 2022 July, basically that's when they started, and since then you would have actually 28% on your return on your money, which is absolutely amazing. Now, the difference between the two is this one does pay dividends. Okay, I think it's got like 1% or whatever it is, if I can find it. So that's the expense ratio for it, by the way, if you don't know. And I think there you go. So just about 1%, but this one does not pay any dividends, but that doesn't matter, because in the end of the day, what you're interested is the price capital appreciation of your investment. Now, one thing I keep saying to you, I've been getting a lot of messages from brothers who are completely new, and sisters, by the way, who are completely new to investing and want to learn about the stock market. Please do me a favor. If you are interested in basically investing in the stock market, start with ETFs. Okay, this is not financial advice. I'm just saying you will be better off, okay, starting with ETFs than actually doing buying individual stocks, because the risk that involved. Okay, now if you invested in this ETF and you click holdings, there's hundreds of holdings in here. If one of these companies goes down, whatever, then at least you're safe. Whereas if you put, I don't know, 200 pounds into one of these companies and it goes down completely, that means you'll lose 100%. Now, before I finish the video, I'm going to share with you guys the companies that I've added to recently. So ASML, I used to have 5 shares, remember, now I've got 8.5 shares, and that is my average. You can pause the video and have a look at that. The next one that I said I'm basically added to is, or actually added to the portfolio, is this one here. I now have 83 shares, and my plan, inshallah, is weekly buys, or between now and whenever, to at least get to 100 shares and see how it goes. Inshallah, we'll let you know. As you can see, I'm down about 3% on this one. So there you have it. That's all I wanted to share with you guys today. What I'm going to do is, inshallah, between the next couple of days, in fact today I've got a bit of time this afternoon, so hopefully inshallah I'll be able to do another video. RKT, or Reckitt Benckiser's whatever, is actually up almost 9% today, so they must have reported the earnings. So inshallah, I'm going to keep checking on these things. I'll report it back to you guys when I have more information. I hope you're enjoying this content. If you are, genuinely, I would appreciate if you can join us at the Patreon account, and of course you join this journey, inshallah. And yeah, look after yourself and your families. Have a wonderful day. Assalamu alaikum.